Okay, hello everybody. My name is Ilan Azbel. Happy to be with you all again today. This is the third of three webinars. Hope we'll be doing these set of three again in the near future. Before I get going, just to give you a quick risk warning. Firstly, Autochartist is a third party, and the content of this presentation doesn't necessarily reflect the opinions of Pepperstone. Of course, very important about Forex, derivative, precious metal, CFD, and other OTC products. They're very high risk. Margin trading is very high risk. Don't trade with money you cannot afford to lose. That's very, very important. So now that that is out of the way, let me switch my screens across to my MetaTrader, and hopefully you all can see my MetaTrader. In fact, I want to switch to my Chrome browser. Okay, so everyone, my name is Ilan Azbel. I'm the CEO of Autochartist. Today we are going to be talking about quite an advanced topic, which is how to select the best trades using our tool. And when I say the word best, there is unfortunately another little disclaimer that has to come along with it. The way we rank the best in inverted commas trades is by looking at the past performance of the different trade setups over the last 6 months. Of course, the disclaimer is the fact that past performance might not be indicative of future performance, right? Which I'm sure you all know, because financial markets change their characteristics all the time, and there are certain macroeconomic or economic events that change the way a currency behaves. So it's very important to use the historical information as a guide, but certainly you need to be aware of new and changing opportunities or new and changing market characteristics. And so today I'm going to run you through not only what the statistics say, which are fully disclosed in our platform, but also about my own trading experiences and what I found to work for me when I'm doing some screen trading. So the first thing you got to know, there was a bit of confusion over the last few webinars. I am not here to sell you anything. Autochartist is a tool that is offered to you completely free of charge if you have a live account with Pepperstone. Okay, so I'm not trying to sell you anything. If you like our product, happy for you to use it. You don't have to pay anything. Just open a live account with Pepperstone, and you get access to this at no extra charge, to you. Right, so the first things first, again, just to recap about how to get to the tool. So if you click into the client area and then click on Trading Tools, and there's a section called Autochartist. You should see this on my screen. You get a page that says Technical Analysis by Autochartist, where you're able to download the MT4 platform, launch the web application, which we will be doing for today's presentation. You're able to subscribe to our daily market reports, which you can unsubscribe to at any point in time by clicking a link at the bottom. So it's a risk-free subscription to email reports. And I covered them a little bit in the previous presentation. And at the bottom of the page, you will see just a few highlighted trading opportunities that we're seeing right now in the market. Okay, and these are quite important. I'll come back to them because these are, in fact, some of our hand-picked opportunities, as I was mentioning before, and the primary topic of conversation for today's presentation. Right. So these are opportunities which we believe have a over 60% chance of hitting their take profit level, our target level. This one, in fact, has a 72% probability. This one's a 64% probability on the pound, and one on the pound New Zealand dollar. Again, a 64% probability, and a few more at the bottom, right? So we will come back to this about how we actually calculate these trading opportunities, but that's briefly to say how you get the product. What I'm going to be doing is showing you primarily working through MetaTrader. So you download the MT4 link and you go through a wizard process that goes next, 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 and hopefully at the end of it, you come up with something that looks like this, and you should all see my MetaTrader. I'm just going to see what you all are seeing. Okay, I think you're seeing my MetaTrader. And if you notice on the bottom left-hand side, there is an expert advisor called Autochartist. And I know it's called an expert advisor, but do not worry, it does not trade on your behalf. Autochartist does not trade on your behalf. It just provides the technical setups for you, right? It scans the market for technical setups. And if you don't know what I'm talking about, listen to the first two webinars. And what I'm going to do is I'm going to drag and drop the Autochartist expert advisor onto my chart, and hopefully within a few seconds I am going to get a list of technical setups in the market right now. Okay, and so the first thing that we notice is that there is a window that pops up over here on the left-hand side of your chart that shows you 8 pages of trading opportunities. That's a lot of trading opportunities to go through, and I'm going to show you how to filter that down, right, for, again, the term the best trading opportunities. Again, keep in mind that disclaimer about the best, it's based on the past performance. Okay, and so the idea around filtering these opportunities is quite simple, and it ends up being simply a clicking a drop-down box and setting the minimum probability. But before you use anything, certainly in trading, I always tell people that you need to understand what you're doing. Don't just be like a parrot or a monkey. It's different analogies in different parts of the world. Don't just click buttons not knowing what they're doing. So it's important to understand what is the effect of clicking a drop-down button to filter for the best trading opportunities. So in order to do that, I want to quickly show you some examples of the kind of opportunities that Autochartist identifies. And the most important distinction I want to show you is this concept of completed versus emerging patterns, right? So if you notice in the Autochartist window, you have 2 types of arrows, right? So in terms of the coloring of the arrows, you have 2 types of arrows. The first type of arrow is a green or red arrow, right? That means that the price has broken through a support or resistance level. Let's look at what that looks like, right? So I'm going to click on XAG, and if all goes according to plan, Autochartist should change my chart to XAG USD. Daily chart, it'll change it, and what we'll see is that the price has broken through a resistance level over here. Let me draw that for you. Can you see that over here? Right, it's broken through, and we think it's going up to this target level. Okay, so now this is what we call a completed chart pattern. It's completed, or we're actually changing the words right now to call it breakout chart pattern. It means that we can now provide a forecast level, and how we provide a forecast level was in fact covered in last week's webinar, but just briefly, we use standard technical analysis methodologies, right? We don't just kind of suck it out of the fresh air. We use standard technical analysis methodologies to create this forecast level, and once we've created that level, then that's when we provide that forecast to you. So obviously in a situation like this where we know what the forecast level based on standard technical analysis techniques, we can measure whether or not a price has actually hit that level, right? Okay, so what we do is we say, okay, so from here all the way until this kind of point in time, which is a pattern length, this is what we call a pattern length, we're going to check whether this price crosses this line. It looks like the target is around 1748 on XAG USG. okay, USD. Okay, so we're waiting to see if it crosses that line, and so we allow it some time to move to see if it crosses that line, and if it does, then we say Autochartist made the right forecast, right? If it doesn't, then we put a little X next to it and say Autochartist didn't make the right forecast. Of course, one needs to keep in mind that the price can move in multiple directions, right, from this point in time, okay? It could move down and up, in which case we still give it a good result. It could just move straight up. Yeah, that's a good result. It could just move down and never hit it. That's a bad result. But notice the most important thing over here is that even if we see a major dip and it goes back up, we're still saying that was a good forecast. Now, some of you might say, oh, but that would have hit a stop loss, or, you know, would have exited before it hit the take profit level, the forecast level. The truth is yes and no. That might be true, that might not be true. And why I say that is because there are dozens of different stop loss strategies in the markets, right? I spoke about setting stop losses using market volatility in last week's webinar. That's one technique. There is trailing stops, fixed stop losses. There's stop losses using moving averages. There's stop losses using parabolic SARs. There's stop losses using Bollinger Bands. I can name you more than a dozen stop loss techniques right now in the next 30 seconds. The point is that Autochartist is a tool used to identify technical setups. We're not trying to sell you a system. We're not trying to promise you that you're going to be a gazillionaire. We're trying to find you high-value technical trades, okay? And I think we do the job pretty well. But in that same breath, we're very aware of the fact that a lot of you use different types of exit strategies based on your trading style. I know I have my different types of exit strategies. You have yours. So when we try to come up with these statistics about how good is Autochartist or how well does it perform, we had to find a way of creating statistics which were independent of stop loss strategies, right? So what we did is we went for this very simple method of, does it hit this target level or not, right? Within a certain period of time, of course, right? Not forever, because if you look at it forever, then we'll have a 100% track record, right? Because currencies move up and down, right? So we give it a certain period of time and we see whether we have been successful or not. Now, I want to show you a different type of trading opportunity, and I'm going to click on this one, US 30. And sometimes these examples work, sometimes they don't, because the markets are changing, so I can't pre-prepare every example. Right, so here's an example on the US, the top 30 instruments in the USA. Okay, now what you can see here is you can see that the price has gone up, down, up, and now it's turned around and heading in this direction. This is what we call an emerging pattern. An emerging pattern has not yet hit a stop, has not yet hit a support or resistance level. So on an emerging chart pattern, we cannot provide a forecast. Okay, if you notice, I'm going to squeeze this this thing, the scale in, and you can see there's no gray area here. There's no gray area above. There's no gray area below. Right? It's because, simply speaking, this is a moving target, and there is no technical analysis theory about where this thing is going. This is just an additional feature that Autochartist gives you to allow you to take a preemptive strike on the market if that's what you want to do, but we cannot provide you a target. If we cannot provide you a target, then guess what? We can't measure how well we've done on these patterns, right? So there's patterns on which we can provide targets and we measure our performance, and there's patterns in which we don't provide targets and we cannot measure our performance, okay? And so what you'll notice is that the chart patterns with these gray arrows are not included in our performance analysis, okay? In fact, if I click on this filter button, I want to show you the ones that we do and don't provide performance analysis on. So I'm going to tick all the different types of patterns, and I'm going to show you the ones we do provide statistics on. That's completed or breakout chart patterns, just like the one I showed you a few minutes ago on silver, and key levels, breakouts, and approaches. And I'll show you some examples of those. We do not provide statistics on emerging chart patterns like the one I have on my screen at the moment, right? Because we don't provide a target, and this is a moving support level over here. And we also don't provide statistics on Fibonacci patterns. With Fibonacci patterns, it's a really, really complicated task. My personal view on Fibonacci is that if you draw enough lines on the chart, something's going to hit. It doesn't mean that it was a good forecast. It just means that you threw the dart enough times, right? And you managed to hit something, right? So we don't provide statistics on Fibonacci patterns and emerging chart patterns. So the first filter that I'm going to apply in order to get the best quality opportunities are these three over here: completed chart patterns and breakout and approaching key levels. And I'm going to save those. Right? And what we'll see is that the quantity of patterns that we've identified has gone down from 8 pages down to 2 pages, right? And right now, I'm not seeing any emerging key levels. Okay, I'm going to show you what those look like in just a moment when I open up the web application. So what you will notice. And again, this is quite interesting. In fact, I just noticed this now. So this opportunity we saw here on XAG is a triangle and a daily pattern going up. But on the 4-hourly, we have a correlating signal here, which is an inverse head and shoulders, which is quite interesting. So I wonder if we can change that to a 4-hourly chart and see what that looks like at a 4-hourly level. There it is, inverse head and shoulders, very, very powerful pattern. So this is very nice. I mean, if you ask me about what is an important signal, this is something that is very, very important, which is signals, 2 signals or more signals on the same instrument going in the same direction on different time intervals, right? These are what we call confirming indicators. Another interesting one that's happening at the moment is, if you notice, New Zealand dollar looks like we're forecasting it to depreciate against the Swiss franc, against the US dollar, twice, right here. So it looks like we're forecasting it to depreciate against the Swiss franc and the US dollar, right? Again, another interesting correlating signal for the New Zealand dollar. Let's have a look at what that looks like quickly. That's on a daily chart. Looks like it's broken out, and we provided a target region over there. Okay. So I babbled on a bit there for a few minutes just because I noticed something quite interesting, and sometimes it's difficult to prepare for these webinars because the markets are changing so fast that sometimes you notice things you wouldn't have noticed before as you start the presentation. Now, I know I'm going pretty quickly, everyone, and I can feel myself talking really quick because we've got a lot to get through. So I'm not even looking at the questions panel. I've got Yvette and Rhonda on the line from the Autochartist team to help out with questions about Autochartist. And then we've got Fabian on the back end from Pepperstone side answering questions from Pepperstone. What's going to happen at the end of this presentation is that I'll get Yvette and Rhonda to call out a few questions that they thought were exceptionally interesting, and I'll answer those at the end of the presentation. But right now, I really do want to focus on what I want to say. Okay. So now that we've filtered for these kind of patterns, right? I want to show you the actual statistics of what we're talking about here. So what I do is I click on this little world icon, and you get a URL here which you can copy and paste into your browser. And hopefully that will bring up some statistics, right, about the different types of analysis that we produce. Okay, good. So if you notice, the first thing you have to notice is that we provide 3 columns of statistics. And as I mentioned before, the completed breakout chart patterns, the breakout key levels. Breakout key levels, I haven't shown you an example because I can't see any right now in the market. Those are the ones where the price is broken through a horizontal support or resistance level. Those are horizontal levels, and you would have known this if we listened to the first webinar in the series. And approaching key levels. These are the patterns where the price of an instrument is approaching a horizontal support or resistance level, right? So let's look at each of those in turn. Okay, so the first thing is the technical chart patterns. We'll look at the Forex statistics. And here what we have is complete transparency on everything we've done in the last 6 months. So the first thing is the overall statistics and the summary. That this is for Pepperstone on the Forex market, and a moving window of 6 months. And this is a moving window that's updated every 2 weeks. Okay, we've identified 34,000 opportunities, or just under 35,000 opportunities over the last 6 months, of which just under 23,000 hit their target price. Okay, but you know, that's 66%, which is pretty damn good anyway. Keeping in mind that professional traders only look for a 51 or a 52% edge. But the important part here is to see what has or hasn't been doing well when broken down by different types of characteristics. So let's look at these in more detail. Ascending triangles. This is a very significant statistic because ascending triangles have been performing pretty well. Out of 1,400, just over 1,000 hit their target region over the last 6 months. Similarly for channel downs, channel ups have done really well. Descending triangles have done really well. And I'm highlighting a few of them because for a specific reason, and I'll show you why in just a moment. Double bottoms have done well, although they're few and far between, they have done pretty well. And so have double tops. In fact, double tops have done exceptionally well, but the numbers are not as high as some of the other triangle patterns. The triangle patterns are the most common, the most prevalent patterns that are in the market. Notice the 2 leaders, and well, they're mostly leaders, are the head and shoulders and inverse head and shoulders patterns. Right? And then we have a rectangle. And I'm not going to go into exactly what these look like right now. I'll show you what they look like, these shapes, in just a moment. I'll show you where you can find that in the application itself. So notice how those types of patterns have done really well. I've missed out a few, the channel downs, the channel ups, just for now, because I found that these vary quite a bit with market conditions as they're trending up or as they're trending down. But the ones that I highlighted right now, there's one thing common about all of them. And I'll draw them each individually for you. This is what an ascending triangle looks like. This is what a descending triangle looks like. Watch carefully, because I'm going to ask you what these have in common. This is what a double top looks like. This is what a double bottom looks like. This is what an inverse head and shoulders looks like. This is what a head and shoulders looks like. What do you notice about these patterns? I'll give you 5 seconds. 5, 4, 3, 2, 1. Okay. There's something common around all these patterns. They're all made of horizontal levels. Look at this. The ascending triangle is a breakout through a horizontal level. The descending triangle is a breakout through a horizontal level. The double tops, double bottoms break out through horizontal levels. Head and shoulders and inverse head and shoulders. These are breakout through horizontal levels. Notice how almost every pattern that has a horizontal level has been a good performer. Now, I can tell you from experience that this is not an exception for the last 6-month window. And in fact, if you will step back to the main statistics page now, you'll notice that the key level patterns, those are the ones made up of horizontal support resistance levels. Those are, in fact, the best performance. These chart patterns have an average of 66%. The horizontal level patterns have, sometimes statistics north of 80%. Okay, why is that? People ask me, why is that? And to tell you the truth, I'm not the oracle. I don't know, but I can only speculate. And in my experience, I speculate with the fact that markets think in terms of important psychological levels in the market, be they round numbers, right, like 1.3 or 1.2, right, where you don't have a lot of pips. Basically, what I mean by round numbers is rates at which there's a lot of zeros at the end, right? Okay, certain psychological barriers, right? Like you see the Dow these days, at 2100, 2200. These are the important levels. If you think about those, that's the way people work. People don't really look at kind of slanting levels. It's too much to comprehend, right? Too much for market psychology to comprehend. They think more about horizontal levels, horizontal psychological levels in the market. Okay, so this is one hint that I'm giving you in terms of performance and picking out the best trading opportunities, right? I'm going to erase all my drawing objects for just a moment, and I'm going to show you, they also have a breakdown by symbol, right? Again, this is, you can see the CAD JPY has done really well, some have done well, some have done badly. We highlight all of them. And then we have one very important thing, which is the breakdown by hour of day. Okay, so this is in GMT +3. Okay, so that is in GMT +3. So it's a few hours ahead of London. You can see that technical chart patterns do really, really well during the kind of the London session. These are the hours of the day over here. Why is that? People again ask me why that is, but for this one I have a definitive answer. The answer is that the capital of the world when it relates to foreign currency transactions is London, right? London is where everything happens, all the volume happens, all the liquidity happens, all the volatility happens. And if you think about what is necessary for market psychology to play out, you need a lot of market participants. Market psychology doesn't play when there's only Billy and Mary exchanging dollars or euros, right? Market psychology needs hundreds or thousands or hundreds of thousands of people or millions of people transacting, letting the market psychology play out. And this is exactly why during the European hours, the technical chart patterns do exceptionally well in terms of hitting their target price. Okay, and so we have all these kind of breakdowns. Towards the bottom, you'll actually find what we call these two-dimensional arrays. For example, this one over here, which is the symbol against the interval, right? So 15-minute data, 30, 60, 240, 1440, right? And you can see how there's more green, but also more red, but certainly a lot more green as you move to the right-hand side, right? The longer term patterns certainly do very, very well, right? And then again, if you're looking at the symbols, the patterns against the intervals, you can see the patterns that we highlighted before and against the intervals, and see how they do. So there's a complete array of results here for you that you can look at in terms of statistics. And I'll show you the simple way of using these in just a moment. But before I do that, I want to go to some of the other types of opportunities here. The first one being the key levels. So let's look at the indices on the key levels. Key levels, we've identified about 312 of them. This is on for Pepperstone on the indices. Okay, this is not Forex, this is on indices. We've identified around 312, around 237 were correct, or they hit their target price, right? And we can see what was doing better, what was doing worse over the last 6 months. Of course, this is just support and resistance. There's not a lot of different chart patterns, but you can see in general, we've done pretty well. There's some exceptional ones over here. The NASDAQ 100, we've done exceptionally well. The top 500 US stocks, China, Australia 200, we've done really, really well as well. US 30, we've done well. France 40. Okay, so I mean, a few, amazing statistics. We haven't done so well on the German markets. Okay, and again, these are some of the stats, and we move to the approaching key levels, and I'll show you what those look like in just a moment. Again, more stats for you to look at, some seriously exceptional performers. And so what I'm going to do is I am just going to launch the web application and show you what some of those examples look like. Okay, so let's go into trading opportunities. And I'm going to look at the FX majors. Oops, those are exotics. I clicked on the wrong thing. Sorry, my computer is really slow. When I do screen sharing, my entire computer almost comes to a grinding halt. Okay, let's see what we can do in terms of filtering some results. So this is our trading opportunities. Not much on the emerging key levels. Give me a second, everyone. When I set up an hour ago, there were a ton of emerging patterns, and now we have no emerging patterns. So give me a moment to just find one or two. Don't seem to have any over here either, which is very, very strange. I don't actually have any to show you right now. Oh, there is something here on metals. Let's see what that looks like. I hope it's a good example. Okay, so active trading opportunities. Here is one. Okay, so what's actually happened is that it was an emerging opportunity, and now there's been a breakout. What I wanted to show you, really, I can't seem to get a good example. But if you can imagine a breakout which hasn't yet broken through support resistance, but let's say was identified at this level here, pointing up to a resistance level, that is what we call an emerging trading opportunity, right? It hasn't yet broken out, but at least certainly this is an example of a horizontal level. Not quite sure. I think the market is trending quite strongly right now, so I think that's why we're not seeing any chart patterns play out. Any emerging key levels right now. Let me quickly see if I can find some older ones. Okay, so there was one. Okay, so support. So here was one that was identified quite a while back, hours ago. It was on the Swiss franc. There was a breakout through support. We forecasted down to this level. It certainly did move down towards that level. Here is the first one that I showed, US dollar Swiss franc. It was heading towards the support level. We forecasted that. Wrong direction, unfortunately, right? However, you will find that if you do click through some of these expired trading opportunities, you will find substantial amount. In fact, over 80% of them do hit their target level, just like this one did. We forecast the Japanese yen to move up to 110.19. Looks like it did touch that level just a few candles after we identified it. Let's try and find something slightly older term. Let's see if we can find something older. There's something down here. Euro USD hourly. Okay, so we forecast it up to that level, 113.26. Looks like it went down a little bit and then straight through that level and up even higher. So that was a pretty good result. You would have had to wait a day or two in order to take the profit on that opportunity. Okay, back to the active trading opportunities. So if you're ever wondering what any of these patterns look like, then I suggest you do one easy thing, which is click on this new search button, click on advanced search, and then I'm selected currently on the section called chart patterns. And if you go to the bottom, you'll actually see what all the patterns look like. We actually draw them for you. Huh? And if you want only the horizontal patterns, which are the ones I spoke about earlier, what I call the best performing ones, consistently the best performing ones, you can just click on the horizontal patterns section and it'll filter for the best horizontal patterns. If you want to know what a Fibonacci pattern looks like, remember we don't give statistics on Fibonacci patterns, but just in case you want, there they are in the Fibonacci pattern section. 6 of them. And if you want to know what the key levels are, those are pretty easy. Those are just horizontal resistance and horizontal support levels. Okay. So now, the thing about Pepperstone is that it's unlike many other brokers that they have subscribed. There's only a handful of brokers in the world, Pepperstone being one of them, that subscribe to our headline product, right? And that is something called our favorites. Okay, I'll click on that in just a moment. Imagine if one takes the trading opportunities and merges them together. That's this entire list, trading opportunities, and merges it together with performance statistics, right? So you don't ever have to look at the performance stats, right? It just takes them all and just whoop, combines them together. That is what we get in the section called Our Favorites. Our Favorites takes all the trading opportunities right now and shows you what has a minimum probability of 60% or more in the market, right? So we can look at the crosses, we can look at the exotics, the indices, all of these trading opportunities we can look at, right? And we can set the minimum probability to whatever we want. We can choose 75, in which case we're asking for a miracle. I'm not sure if we'll ever get it, right? We can ask for 70, in which case we'll probably get a few more, right? If you ask for 80, it's highly likely you won't get any opportunities. Oh, there's one on an exotic, on the, looks like a Turkish lira. Okay, so these are what we call the best trading opportunities. Again, past performance may not be indicative of future performance because these are all based on the last 6 months. But now I want to show you where you can find this in MetaTrader. And here it is in MetaTrader. If you simply drop this Dropbox and choose one of these items from the Dropbox, oh, if I can actually get that to work, Autochartist will filter for the opportunities with that minimum probability level. Okay, so of course we're going to get that inverse head and shoulders in there, and we saw the stats on the inverse head and shoulders. If I recall correctly, was it over 80% or was it over 75%? I don't remember, right? So here is an opportunity to buy up to, it looks like around 17.25 or so, right? And these are all the opportunities with these high probabilities, over 65% probability. If you filter that down even more, right? You could down to 70%, 80%. There might be situations where you don't get any trading opportunities, right? Okay, that means your filter is too high. Again, remember, use this with caution. Again, past performance is not indicative of future performance, but certainly from a past performance perspective, these are the best patterns. The other thing which I always tell traders to do is filter down your market watch list. When you first install MetaTrader, there are hundreds, at least dozens, hundreds of instruments listed in your market watch window. Autochartist will look at that market watch window as an indication of what you're interested in. If you filter it down, you'll get less trading opportunities. But in this situation, in the world of trading, less is in fact more. What you want to do is you want to filter your universe down to something you understand. If you live in Australia, trade the Australian dollar. If you live in Europe or the UK, trade the pound or the euro, right? If you live in the US, trade the Canadian dollar, right? So trade what you know, right? Trade what you know, trade what you understand or what you're reading about, right? It doesn't have to be the country you live in, trading whatever you feel comfortable trading. But, remove the stuff that you don't need. Also, you'll get much better performance on your computer and your MetaTrader if you remove some symbols, because obviously the amount of data that has to be transferred to your meta is much smaller, right? So you'll actually get your ticks coming through a lot faster, and you'll get better performance on your trade execution as well. Okay, so I think I've spoken for long enough, and I'm sure there's a million questions. I hope I've given you some guidance. Yvette or Rhonda, could I ask you to share a few questions with me?
Hi, Ilan. Can you
Hi,
hear
Rhonda.
me?
Yes, I can. Hi,
All
Rhonda.
right. So we have a question from Sharinova asking the following. Now that we have so many ingredients, how can we bring them together selectively and plan to select best possible trades and then plan these trades?
Yeah. Okay. Okay. So I mean, I think I've gone about selecting the best possible trades quite extensively in this situation, in this presentation. I think that there are one or two additional things which I personally look at when looking at trades. So, for example, let me zoom in a little bit on this example right here, because it's a pretty good one. Again, as I said before, I love horizontal levels. That's one thing I like. I see a breakout and I see a confirmation, right? A continuation in that direction. This is the kind of thing that I really, really love, confirmation, right? Another thing that I use is, for breakouts, is I use a moving average. I always use a 35 candle moving average. I like to see a moving average moving in the same direction as the breakout. That for me is another confirming indicator. For me, these are all little factors which add up in my head when I think, okay, this is a trade worth taking. Okay, and then, obviously in the previous presentation, I went quite a lot into how to set your stop losses and take profits, right? So how to use the expected volatility ranges for the next 4 hours, or daily volatility ranges to set market appropriate stop losses. So we've gone over that quite extensively in the previous webinar. We had a whole hour just on that. But yeah, just a few additional things. Moving average in the same direction, a confirmation of the breakout. These are important factors to take into account.
All right, thank you, Ilan. We have another question from Justin, who says, so Autochartist is pretty much out there, so the people who don't understand technical analysis can use this to place trades, instead of learning the way of the market movements. Is that correct?
Right, that's exactly correct. So I also see, I just opened up my questions window, that somebody asked, can Autochartist be converted into an automated trading system? And I think that goes hand in hand with Justin's question now. That is not the purpose of Autochartist. There's a lot of people out there trying to sell you get-rich-quick systems. I can tell you right now, I'm an industry professional. I used to trade full-time on the Johannesburg Stock Exchange. Get-rich-quick schemes don't exist, and if they did, those people will be trading their own money and not selling you a subscription for $100. Okay, trust me on this, right? So the only way you're going to make money in the markets is by taking control of your own trades, and that's by learning how to trade, learning the dynamics of the market, take a few instruments and learn them well. And that's the purpose of Autochartist, is to filter the market, filter the noise out, and just try to simplify things and focus your attention on a few important trade setups, right? And so thank you. I mean, I think you summarized it exactly right. That's exactly it. So you don't have to become a technical analysis expert. We try to focus or highlight a few important key opportunities that you need to look at to save yourself some time.
All right, thanks, Ilan. We have a question from Pankaj, who wants to know what are the confirming indicators we can use.
Okay. Right. So there are two types of indicators I would use. Okay. So let me show you this. The first one, as I mentioned just from 2 questions ago, is a moving average. So on breakouts, I use moving average as confirmation. So a moving average of between 35 and 50 candles moving in the same direction. That's for me a very strong confirming indicator. Now, what I'm going to do is I'm going to show you one other thing that I do, and I'm going to try and just filter this out. Sorry, give me a moment, everyone. I want to bring back the emerging chart patterns. Just a moment. And if I can remove this filter, not sure why the filter is not removing. There we go. I want to show everyone, because some of you might not want, or some of you might want to trade emerging chart patterns, in which case I want to show you what confirmation indicators you can use. So let's just look at this USD 30 example that I showed before. Not USD, US 30, sorry. So this was a channel, if I recall correctly, that was moving down. Right, okay. So what I could use in terms of the emerging patterns, right, the ones that have not broken through, is, give me a moment, is you can use something like an RSI, okay, to show you whether the market's been overbought or oversold, right? Because the emerging chart patterns show you whether there's been a turnaround and whether we expect the price to continue to go down or up. So what we're seeing in this situation over here, in this example, is that the RSI is not below 30, which means that the market is not yet in an overbought. So it's between 30 and 70. It's not in an overbought or an oversold state, right? So you can see, let's just take an example here, where the RSI was above 70, you can see that the market already got to an oversold state, right? And over here, where it just touched 30, you can see, sorry, overbought state. Now here you can see the market was in an oversold state. And in fact, interesting enough, it just touched the level. Over here, the market's moving sideways, so we're kind of unknown about where we are right now. So there's no confirmation indicator right now with regards to RSI. So potentially, this market is going to continue to move sideways. We don't know where it's going to move. Okay, so for example, you wouldn't trade because you simply just don't know where it's going to go. Let's look at another example. See if we can find one with a supporting indicator. Okay, this is interesting. So this is quite an interesting one, because you can see here, this is an emerging wedge. You can see over here, the price went to an oversold state. It bounced off support. Now it's heading upwards, and now is it going to turn around? It looks like it's, it could touch another oversold state again, right? So we could take a short position now if we really wanted to. The other thing, this is very advanced now, okay? So what I'm going to show you is something really, really advanced. I don't even know if I should show you all, but do all of you want to see a really advanced trading technique? Not sure if you do or you don't. This is used with your own caution. Okay, so I don't know the skill level that I'm talking to here. It's very, very interesting to know. But you might do something like this. Let's just say you think that this level over here is an important level. Let's just say here, 142.29 or 142.30 is an important level. You might think, okay, if this is an important level, and also this one over here is an important level, 143.23, what I could do is that I could in fact set two pending orders, right? Okay, so for example, I wanted to, if I expect a breakout through this level, right, for this trend on this instrument to turn around and be in the market, right? So what I could do is I could do a pending order on a buy stop at, what did I say, 143, 23, 143.23, 4, right? And I can set some kind of expiry date. And now I have a pending order in the market at that level, at that first red level over here. Let me just try and erase this object. I have a pending order right over here. And then what I would do is I could also set a pending order, a sell stop at 142.29.7, and I could place that pending order. So now I have a pending order down over here, a sell, right? So now what will happen is that if the price breaks through, so now remember, now I've got two lines here, but I haven't taken a position, right? But what will happen is that if I see some volatility happening on GBP JPY, I think the price is either going to break through this line or break through that line. In either case, I'm going to be in the market, right? So this is going to be, I'm assuming, a turnaround. This, I'm assuming, is going to be a continuation. So right now, I'm unsure. It's kind of moving up and down. But in either case, there's going to be a turnaround. I'm going to be in the market straight away, and I don't have to have my MetaTrader open, right? So there's another way of trading emerging patterns. And that's pretty advanced. Did anyone understand that? maybe I should repeat that. Again, it's difficult for me to gauge the level of traders that we have on this presentation. But again, just to give you an idea of how it is possible to trade emerging patterns, taking a kind of a preemptive strike on the market. Now, what I did in this situation, I didn't want to spend too much time on this example. I didn't set an expiry date. For pending orders, always set an expiry date, right? I mean, you don't want the thing out here trading 2 days later, because it just simply doesn't make sense, right? So this is a 4-hourly pattern. You can set it to the next kind of 8 to 24 hours in terms of expiry, so that you don't have these pending orders in the market that you've forgotten about, right? And then I'm actually going to delete these orders. I don't want to keep them in the market. Well, I went on a bit of a tangent there, but anyway, just to give you some ideas around that. Also, the stochastic indicator is very similar to the RSI indicator. You know, you can also use a stochastic. I don't find a big difference between them. For emerging patterns, any oscillator, whether it's RSI or stochastic, will work pretty well as a confirming indicator to know whether it's been in an overbought or oversold state. Rhonda, sorry, I've
All right, no problem, Ilan. Ilan, can I give you one last question?
Sure.
Tapiso has asked if you can please talk a little bit about correlating alerts and the email alerts he gets for these.
Correlating alerts, right? Okay. So the correlating alerts. I don't have an example here. I should have maybe prepared one. I wasn't expecting a question to come up. It shows you, if you subscribe to the correlating alert email, I wonder if I can show that. Oh, it's not actually here. We do have a correlating alert email, which people can subscribe to, which I wonder where I can show that. In fact, I think I've got that in my messaging and alert section. Right. So it's kind of hidden away. It's a little gem that's hidden away. um, I like it because I developed it for myself. So, but what a correlating alert uh, is sorry, I'm babbling because I want to see if I can find an example. Okay, what a really bad example here. But okay, so a while back, a few days ago, we found a correlating alert on GBP New Zealand dollar, where we saw key levels and chart patterns all pointing in the same direction for an instrument. So in this situation, on GBP New Zealand dollar, there was a lot of indication that the price was going to move down to 176.40 or so, right? Looks like it moved down a little bit, but then it called it completely wrong. I'll tell you my experience in the past is that signals all pointing in the same direction are normally a very good indication of a good trading opportunity. Again, this is a good example. I never try to hide these things. Sometimes stuff goes wrong, right? And you need to set your stop losses. In this situation, I personally don't trade crosses. I only trade USDs, USD instruments. So it went horribly wrong in this situation, right? So you should have, if you set a stop loss, you would have made a loss, but that's fine. You just made the wrong call. But in general, the correlating signals are very, very strong, especially if I look at the ones, for example, now we have on these on XAG and on, I think it was the New Zealand dollar, which I showed you earlier. Those are very, very strong signals to follow. I see there's one more example. Oh, right. People are going to ask this. I see that. I think Graham has asked a question. This will be my last one. He asked two things, actually. So the first thing is, what are the best time frames to trade? The best time frames, there's no answer to that. There's no such thing as best time frame. It all depends on your risk appetite. If you're the kind of person that can open a trade and monitor it all the time, you can trade 15-minute candles. If you are the kind of person that wants to open a position, leave it for a few hours, come back to it, monitor on your phone, then don't trade the short-term opportunities, trade the longer-term opportunities. I can tell you that from a chart pattern theory perspective, the longer-term opportunities are the best ones. Whether we have empirical evidence on that or not is questionable, but certainly it gives you longer-term opportunities, give you the chance to control your trade, right? Control your trade, meaning control the risk of your trade, move stop losses around, take profits around. So certainly, if you're a beginner trader, you should be trading hourly candles or more, right? Hourly, 4 hourly, daily, taking smaller positions on longer term patterns. Allow yourself movement, allow yourself time to move. And I covered this extensively in the previous show. And then the other thing you've got to keep in mind is the fact that news events may have affected market volatility, right? So you could have a news event coming up, right? And then suddenly the market changes direction. You want to have time to react. If you're trading really short-term opportunities, taking big positions, man, you got to watch your trading screen, right? If you're taking longer-term opportunities with smaller positions, then you have more room to move, right? And control your risk. So also keep in mind those news events that are coming up. But yeah, look at the previous webinar in terms of controlling risk using market volatility. Okay. Wow. I've just been seeing this questions panel scrolling through. Guys, I'm really sorry if I couldn't get to your questions. It was a very, very important and complex topic that we spoke about. And I also went into an example of how to place pending orders. That took up a bit of time, but I think my time is over. I'm allocated 1 hour by Pepperstone again. So this is not a sales pitch. If you like our product, use it. It's free of charge if you open a live trading account. I always tell people never to trade with a demo account because you will not learn anything. I always tell people open a live trading account, even if it's with $100, $200, $500. and trade tiny little lots, like I do in this webinar, 0.01, just to get the feel of stuff, because when it's real money, your attitude changes. And I'm sure the fact that all of you are here, your kids are not going to starve if you lose a few dollars here and there. You're going to start worrying and panicking when you're losing hundreds or thousands of dollars, right? So open a live account, trade tiny lot sizes, just to get the feel of the market, to get your mind and your energy into trading. You're going to pay your dues for the first 2 to 3 months, maybe even 6 months, and then after that, you're going to start seeing an increase in your profitability rate, and that's where you can start increasing your position size and your deposits, right? So anyway, that's just my own personal views on it. Thank you very much, everyone. This webinar will be recorded and will be posted to you very, very soon. If there are any other questions that you want answered, please email us support@autochartist.com, or contact your Pepperstone representative. That'll help you to get this product installed onto your MetaTrader, or get you to open up our web platform. Enjoy the rest of your evening or day. Bye, everyone.